What's going on, YouTube Nation? This is Darth Dividend, and if you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. And if you like this video, make sure you give me a like so that you can spread it around to the other dividend warriors out there in the dividend investing community so that they can see this on YouTube. So I was asked if I thought Wendy's is a buy, and if I will continue to invest in Wendy's. Well, first of all, one, I'm not a financial advisor, but I'm going to show you my rationale why I have that in my E-Trade dividend portfolio and why I think this is a hot stock. Well, first of all, let's think about this. Wendy's is a fast food restaurant. Fast food is not going anywhere. It is not going down. It is just going to keep on going up. So Wendy's is a competitor with McDonald's, and I'm pretty sure in those commercials they love to puff their chest about, their chef from McDonald's leaving to go to Wendy's to get their breakfast going. So this is in Dublin, Ohio. Let's see how many restaurants Wendy's has. Oop. 6,500 restaurants, and these are not just going anywhere. So 29 countries, and including the United States. So let's see their global growth vision. Okay, so they internationally franchise, just very good. So this is North American franchising. So they franchise. They're growing, okay? This is the good thing about Wendy's. They are growing and they are expanding. I will also go over the dividend analysis and stock analysis on that, but let's look at the stock analysis first. So here's how it looks right now. It is down. So right now, it's down 2.01%, but look at how its stock has grown over time. Now look at the recession hitting, that's kind of a given, but it's really rebounded since the recession. And then this thing just hit, maybe took a little bit of a nosedive, but it's keeping right back up there. So let's see how it is done against the S&P. So this is a fast food restaurant. So I'm going to compare it against the S&P and some fast food restaurants as well. Okay, let's compare it to the S&P. In the past 5 years, let's do the past 5 years. So Wendy's has beaten the S&P in the past 5 years. That is huge if you are a dividend investor. That will help you with your confidence in buying a stock if it is doing well against the S&P. Because it's doing well against the S&P, chances are it'll probably increase its dividend over time. So that's something that's really nice. Of course, since inception, it took a big nosedive, but it's like right up there with the S&P since inception, and it's probably going to beat the S&P. I'm just assuming, just by looking at this, it's just neck and neck with the S&P, and it looks like there's a lot of potential with them chasing the S&P and beating them. I mean, it's right neck and neck with these guys, and there's a lot of potential there. So in the past 5 years, it's beaten the S&P. Okay, 6 months, right in line. 3 months, year to date, neck and neck. Past year, it's beaten it, so that's very promising. Now let's look at the financials of Wendy's. So it's revenue. Let's just do September 2009. Okay, the revenue was up, and look at all these down arrows. Okay, net income, diluted EPS, net profit margin, operating income, net change in cash, cash in hand, cost of revenue. Then we go to December, everything's up. Revenue's up 7.84%, net income's up 40.9%, diluted EPS 37.5. So the arrows are starting to go up. There's more up arrows than down arrows. Net profit margin 30.81%, operating income is down. Net change in cash is down, but cash in hand is down, but cost of revenue is up. But then let's go over here to March. Oh, I'm sorry, that would be December 2019, March. So things are going, so December, March, September, hold on one second. So things have gone up, okay, just by looking at this. And, things are very promising with the way things are increasing, okay? So I like these arrows being up, okay? So let's see how it's done against McDonald's. Because that is a huge competitor. Now McDonald's is way up there, but in the past 5 years, neck and neck with McDonald's. Past year, beating McDonald's. 6 months, neck and neck. 5 years, it's probably going to catch up to McDonald's. And first of all, it's catching up to the S&P since inception. Now it's catching up to McDonald's. So that's pretty exciting, honestly. And McDonald's is like almost $200 a share. So very, very impressive. Market cap 4.33 billion versus 1.35 billion. Obviously, McDonald's is up there. McDonald's has a 2.74 dividend percentage. Wendy's has a 2.47 percentage, which is not bad. But again, that one's going to grow. So let's look at its dividend history. So if you look at the dividend history of Wendy's, it has gone up. So 2012, 2 cents, 2013, 4 cents, 2014, 5 cents, 2016, 6 cents, 2017, 7 cents, 2018, 8 cents, 2019, 10 cents. Let's just go on this site. 12 cents a share. So 10 cents to 12 cents. That's pretty impressive by these guys. So that's, over time, its dividend is going to increase. And I have about 40 shares in my E-Trade dividend portfolio. And over time, that's going to get bigger and the compound interest is going to kick in. Remember, I said my goal was $2,000 to $4,000 a month on quarterly dividends. I think that is highly possible with the dividend distribution if Wendy's keeps on increasing its dividend over time and I just leave it alone on E-Trade. So that is very promising. I am actually very happy about that. And I would consider this a buy, and I'm probably going to buy maybe about 10 more shares, and then I will be at about $1,000 estimated income a year on my E-Trade dividend portfolio. So I really think that there's a lot of potential, and I'm going to show you on my E-Trade dividend portfolio how I'm doing. The Dow took a little bit of a hit, down $622. That's fine. So what did I say about 39? I lost track. Wendy's. Yeah, I have 39.44 shares. So if I go to my estimated income, I would get about $4.73 each time. And if I get to 40 or 45, maybe I'll buy about 45 shares. It's showing right here. If I get to about 40 or 45 shares, that'll go up. Again, my goal is to get to at least 1,000 and start rolling from there. So we shall see how things are going with that. I'm looking at maybe buying more at Carnival. We'll see. but things are looking very strong, and I really like what I see so far. So we'll just leave it be, let the dividends fly, let it ride, and go from there, and then we'll see what happens. So, but I feel very confident in my stocks. I mean, this is so far the allocation on my portfolio is not too big. I mean, look at this. This is kind of expected with what happened, but I'm not too worried. So I'm going to say that that's a buy. I feel very confident about it. I mean, Wendy's, I've been really puffing my chest about the stock. Look at this. A little bit of a hit on Friday, but I'm not worried really, and I'm really excited to see how things will go with Wendy's. And let's see my estimated income. I didn't really go into detail, but I'm close to $125 a month, and the compound interest will just kick in over time and start really rolling. So I'm not really too worried about how things are going. It's just it's frustrating. I know the market's like going like up and down. I'm just going to continue to reinvest. I'm not going to sell it or just sell the profits and throw it on my M1 finance portfolio. My M1 finance portfolio is looking pretty good, but this is, let's see, when does Wendy's does quarterly on June, so they're right with Norton LifeLock. So that's my big dividend month. So I'm satisfied. I'm not going to complain. So that's really what I have to say. So that's my response. Yes, my answer is yes. I think it is a good buy. I think it's a great buy, and it's going to beat the S&P, and it looks like it's going to keep up with McDonald's. Again, I wouldn't say no to invest if I had a lot of money. I mean, if I had $10,000, I mean, I would throw, if you told me to throw $10,000, if you gave me $10,000 to throw in McDonald's right now, and you said McDonald's or Wendy's, obviously I'm going to throw that in McDonald's. But Wendy's, that will grow over time, because McDonald's will probably grow a lot higher. So that's a question somebody asked me. If I had $10,000, who would I throw it in? I'm going to tell you probably McDonald's, because I know the compound interest would help, and it would help potentially buy more shares. But I would definitely work if I had $20,000, and I said, what would you do with it if you could throw it in McDonald's or Wendy's? I would probably throw 10,000 in each. So that's my answer. So thank you for watching this video. I know this is somebody really was trying to grill me with Wendy's, but that's my rationale, and I'm going to continue to keep that as a stock and go from there. So again, thank you for watching this video, and make sure you subscribe and hit the notification bell so you don't miss future videos. I'm a little exhausted after working, but I did promise you guys that I would make a video and defend my approach and my investment on Wendy's. So if you have any more data, or you don't think this is a good stock, make sure you comment in the comment section. But if you think this is a good stock, why don't you give me a like on that? So that way more people can look into Wendy's and look at the fundamentals of Wendy's and study this stock, because I see this one as a lot of potential. So thank you so much, and have a good one.